Well, good afternoon, everyone. Bonjour à tous. Tansei, Tansi, Edlanate, Anin, Han. Welcome, everybody, to the University of Saskatchewan's Fall Planning and Budget Update. If you are just a technical piece here, if you're wanting to have optimal viewing, when in just a moment we're going to do the share screen, there's some view options in the upper right section of your screen, and you could select the side-by-side speaker view. So let's get rolling with the planning and budget update. We will in a moment have our acknowledgement of territory, then we'll move through to budget planning, financial context, and then open it up for Q&A time. May I begin on all of our behalves to acknowledge that the University of Saskatchewan is located on Treaty 6 territory and the homeland of the Métis. And we pay our respect to the First Nations and Métis ancestors of this place and reaffirm our relationship with one another. My name is Airini, and I'm your Provost and Vice President Academic here at our University of Saskatchewan. I'm really pleased to be joined today by Greg Fowler, our Vice President of Finance and Resources, and Devan Mescall, our Chief Financial Officer. They're going to say hello now. Over to you, Greg.
Hi, everyone. I'm Greg Fowler, and I'm Vice President of Finance and Resources, and I oversee financial reporting and operations and our administrative support services. Thank you for attending.
Thanks, Greg. Devan.
Oh, first of all, I want to really thank all of you for investing your precious time with us today. That with all the end of semester work on both the student and faculty side and staff, it means a lot, especially when there's other viewing options like the World Cup and Thanksgiving Day football. Also, we really appreciate you making the time to hear what we have to say. And I think we've got some really exciting and interesting information to share with you. And that might just be the accountant coming out of me, but I really hope that you find your investment of time worthwhile. I am the new Chief Financial Officer, and my role is to really provide strategic financial leadership within the senior leadership team and to the president. So,
thanks so much, Devan. Wonderful to have you along to this a continued series of regular briefings with the University of Saskatchewan campus community through these town hall sessions. They're about providing information on the university's planning and budget processes. We host these briefings during the spring and fall each year, and the focus of the spring session was on the budget, the approved budget, and this town hall in fall is about setting the scene for resource allocation and budget building. So following the presentation, which we think will take about 15-20 minutes, and will be part of the materials that are available to pick up on and view, and then provide more questions and dialogue on, and you'll receive the link for that. So following the presentation, we'll welcome wholeheartedly your questions and comments, and Deputy Provost Patty McDougall is going to moderate that Q&A session. So Patty's just going to say hello now.
Good afternoon, everyone. Thank you so much. We'll see you in the Q&A.
The question, thank you, Patty. The questions are so welcome. So please do pose your questions by using the chat function. If for some reason that's not working, then an alternate would be to email Patty McDougall, email your questions there. Now I've just got something showing up on my screen here. I'll just remove that. There we go. So looking at the startup of our time together, we're going to look at budget planning itself. Let's move through to the next slide, please. Thank you. So this section is budget planning. The one that follows is financial context. And in this part, we want to really set the scene for three big messages that will be coming across in today's presentation. The first is that we are continuing to make decisions based on our academic values first, and that budget realities inform those decisions. The next big message is that across the university, we're making real progress towards sustainability. And that sustainability helps us to make real progress towards our academic and research priorities and aspirations. And the third big message in today's presentation is that progress is so important, and we'll have more work to do towards it, but we're really making progress there. We are getting better in our financial sustainability. So we want to say thank you. Thank you to everyone for the part that you and every unit across our university is playing in this shared work as a university. So the university plan itself is the heart of our planning at the University of Saskatchewan. Our plan comes from our strengths, and it's a plan about a journey of bold ambition. We have an academic mission, vision, and values, and we have financial realities that guide us. Our budget and resource allocations are set to advance our university's academic and research priorities and aspirations within our means. So here we have our academic mission driving our decision-making, our financial realities informing our decision-making. And that means looking at how our resource allocations within our means come across to colleges and schools, come across to further education quality, student supports and student experience, administrative support units, to ensure healthy institutional reserves, and to ensure the research, infrastructure, and technology priorities are being supported. So as we move through the presentation, you're going to hear content that will be spoken to, and then you'll see on each slide the key takeaway for that slide. And this is that message that I've spoken of the academic mission driving our decision-making, and then financial realities informing those. On our next slide, we see how the governance arrangements are set up to support planning, budget, and resource allocation. For many who are here today, and it's just brilliant to see that we've got over 200 joining in today's discussion of planning and budget. We have shared previously the budget committee arrangements for the university. This is the latest evolution of what was known once as PSIP, Planning Committee for Integrated Planning, Provost Committee, I beg your pardon, for Integrated Planning, and PAC may have been known to some, the Provost Advisory Committee. We now have the prosaically named Budget Committee, which has a focused purpose to it, to recommend on the university budget for the forthcoming year. The Budget Committee makes recommendations to the Provost. I chair the Budget Committee with the Vice President, Finance and Resources as the Vice Chair, and our CFO being one of the members on that committee as well, along with other members who you can see listed on the slide. And I then report to the President those recommendations, and it is then for the Board of Governors to approve the budget. That happens at the March board meeting each year. We're going to have a look at the timeline for resource allocation and budget building in the next slide. And you can see and hear that we are in that September to December phase right now, where we've been looking at planning and multi-year forecasting early in the term. And now we're into the resource allocation and decisions. Coming to each responsibility centre, that's a college, a school, a support service unit, will be resource allocation decision letters on December the 20th. And then the leader of that responsibility centre has a full month through to January 20th to provide their detailed annual budget. So here's the amount of resource allocation, how much budget will be coming through, and then it's for the responsibility centre to say, well, given this amount of funding, Here's how we plan to actually draw down on that and make the very best use of it for our academic mission. Once we have those budgets, we then move through to March, where we have the collation of those as a comprehensive budget for the forthcoming fiscal year. Our fiscal year starts on May the 1st each year. And we seek the board's approval of that comprehensive budget. Then running through the year, July, October, January, April, there are quarterly forecasts and variance analysis looking ahead. How's the spending plan going? Do we need to make some adjustments? Do we see some variance in the budget spending and use? In May of each year, there's the board approval of annual audited financial statements. And in November of each year, we have tabled our annual report tabled at the provincial legislature. And this is an action that happens in accordance with the University of Saskatchewan Act. And if it's of interest, we can provide reference to the relevant sections of the Act. And Greg's available too to help us understand some more of that compliance piece if needed. So I hope that's helpful, I beg your pardon, for setting the scene in terms of budget planning. Greg's going to now kick us off with looking at the financial context, and we'll be hearing from Devan as well. Over to you, Greg.
Yeah, thanks, Airini. So we've committed to the USask community that we would do regular planning and budget town halls. And these updates, just to ensure everyone is informed. So as decisions regarding the university's academic and research priorities are made by all of us, this is balanced by considering and understanding the university's financial situation. The following financial context is intended to help you understand USask's financial landscape. So just on the next slide. So the university has a wide breadth of activities, and our university has fund types, like all of the rest of the other universities, and they're classified as unrestricted or restricted to capture financial activities. And these financial activities are revenues and expenses. So the unrestricted operating and ancillary funds are where program delivery activities of the university are captured. Those are associated with our teaching, our learning, our administrative support, and our community outreach. This includes the many activities that it takes to operate the university, everything from utilities to all our employee salaries. Unrestricted funds might flow to provide support to activities in the restricted funds. In the box on the right, you will see the 4 restricted funds. And these have defined purposes, and they cannot be redirected to activities beyond these purposes. All of these funds together form our comprehensive financial statements, and our comprehensive budget also follows this format. So I'll now turn it over to Devan to speak about our financial sustainability and operating positions. Hi, Devan.
Next slide. Thanks. Thanks, Greg. Well, understanding our financial context is really important for all of us as a community. And in order to do that, it's really important that we understand where we want to go, why we want to get there, and sort of where we are along that path. The financial reporting of a university, as any large entity, is not simple. It requires a lot of work. And so in order to try to help us as a community really sort of understand where we want to get to, we sort of developed a few indicators here to sort of guide us as we go through different discussions about sort of where we are and what it will mean to us to be financially sustainable. Before we get into those in detail, and the following slides will sort of explain where we are along those paths, I think it is really important that we understand the why. Why is financial sustainability essential to our organization? And really it's because it impacts all of us. Everyone on this call plays an important role in our research and teaching missions. And financial sustainability provides that framework to allow each of you to sort of succeed, all of us to succeed together, And importantly, when we begin to fail on these different indicators, it creates risks in the short term and long term. And so our goals as an organization is to reduce those risks and to really allow us to succeed on those missions. And so as we get into the next slides and talk about where we are, before I just want to talk about why each of these indicators is very important. And so the first one being that when we think about financial sustainability, we mean that we need sufficient and predictable revenue to cover the annual costs of our colleges, schools, and service centers. That seems to be a priority. I don't think that when we think about sort of short-term, most important, that's where we want to be. Next, we have to think about paying down our accrued debts. Over the past, we have accumulated deficits and we have institutional commitments that we need to meet. And so that is another indicator that once those are met, we will be along our path to financial sustainability. We then want to think about maintaining sufficient reserves. As each of you in your own personal finances can understand, particularly in uncertain financial times as we find ourselves with inflation and these sorts of things, ensuring that you have appropriate savings to withstand uncertainties in the future is really important. And that's important for every institution, including our own. Next, as Airini laid out so eloquently, we need to, as we succeed on these financial sustainability targets, that allows us to sort of reach further and do more. And so funding strategic priorities is really is essential and an important part of being sustainable, as well as investing and enhancing our student experience, our research, and our building technology infrastructures. Lastly, as we think about different time frames from going from short term to medium term to long term, we want to be able to look to the horizon and be confident that we are going to have the sufficient and predictable revenues to cover future costs. Next slide. So, start with sort of the first indicator that we discussed. If we look at how we're doing as far as our colleges, schools, and service centers, it's important to realize that we have the budget from 22-23 budgeted or expected a $21.4 million deficit. That means that our expenses in those colleges, schools, and service centers were $21.4 million higher than the revenues that we expected. This is really important to realize because this is our continuing operations, and so it's very important that we, that our goal here would be to have those revenues to cover those expenses. Importantly, as sort of was alluded to by Airini, we're making progress. So even if our Q1 forecast has improved this based on sort of as more of our financial situation comes into focus, that this might be lower. This is sort of down to 13.6. An important message here is that this is as long as we've sort of taken a look at this as sort of a measure of success in our organization or financial sustainability, this is as low as we've gotten this deficit. And so we're really looking forward to, this is good progress and we're heading in the right direction. Importantly, when we do pull out to a broader view and we look at how this is a piece of what we call our operating fund, we are able to balance and cover off this deficit, but we do so using sort of one-time amounts. And so we primarily right now we're using planning to use prior year amounts set aside for COVID relief, as well as strategic funds. We think that this is really important, that this is allowing the really good work that's going on in our different colleges, schools, and service centers as they work to evolve to reach that financial sustainability. So as we say, this is really important that at this time, this is helping us reach these goals. And so those strategic funds are allowing us to, getting us time for those to evolve and get to a point where we look forward to in the future that those will be balanced. And we have a lot of really creative and hard work going on in those units by our unit leaders, by many of you on this call that's getting us there. So, as far as looking at that first indicator, We have ways to go. We're not balanced right now as far as our colleges, schools, and service centers. We're able to have the funds using sort of one-time, but we would like to have those one-time amounts be used for other items and to be able to have a more sustainable number. But we're heading in the right direction as we look to the future. Next slide.
So thanks, Devan. I can take over from here. So when looking at our financial picture, we often focus in on the operating fund trends. And as you'll see here, this slide draws directly from our university financial statements and shows the actual levels of revenues, expenses, and fund balances over a 10-year time frame. So the top two lines represent expenses in red and revenues in green, and the results show that we have spent more than our revenues in 5 of the past 7 years. So in the past 2 years, though, we've seen a positive operating fund balance, and much of that was due to the measures we have taken to both reduce costs and enhance revenues. There was also some temporary cost savings in 2021 during the pandemic, as the campus was only partially operational. In addition, there were very positive investment returns in 2020-21, some of which positively impacted the operating fund. So with the expenses being higher than revenues over the period shown, this was accommodated across our colleges and units by spending down our fund balances. And our fund balances are shown in the gray line at the bottom of the chart. And they're an indicator of our financial health, as they represent the net resources of the organization after all our obligations have been met. So these fund balances also include our reserve funds, which, as Devan mentioned, are in a deficit position right now, but they've been improving in the past 2 years. And these reserve funds help us weather unexpected costs and allow investments in opportunities. So as you can see by the bottom gray line, our fund balances have declined from 2014-15 to 2019-20, but they have more recently improved in 2020-21 and stabilized in 21-22. And leaders, faculty, and staff throughout the university have taken measures within their colleges and units to reduce expenses and increase revenues. And this is very promising work, and it also has to continue. So just on the next slide, I'll provide you with an overview of our financial situation and compare it to a few like-sized Canadian universities. So this information is drawn from the Canadian Association of University Business Officers, also known as CABO. This represents the unrestricted primary operating activities of instruction and research. What we are seeing here is that general operating expenses have trended steadily upward at USask, rising by a total of 16.4% between 2010-11 and 2020-21. So this increase in expenses is about 1.5% per year, which is slightly less than inflation over this period. And revenue growth over this period has been about 8.8% over the same period. So on the left, you can see USask's expenses spike in 2015-16. This was related to 2 initiatives: a significant strategic effort to support accreditation in the College of Medicine, which included a faculty payout to transition to a new faculty model. There was also a voluntary exit program for all faculty offered during this period as well. And in 2017-18, there's a small spike there, and that was due to a staff voluntary exit program and the cost of that. So these initiatives all serve to reduce our ongoing operating costs. So, when you look at the picture on the right as well, you can see when comparing to other U15 universities, such as the one shown, USask has had a greater divergence in its expense growth and revenue growth over this period, although in recent years, revenues and expenses are converging. So just on the next slide here, I'll just give the community a bit of a comparison here in terms of our U15 and U of R. So this shows the level of government funding across U15 universities, as well as the University of Regina. It also includes comparator information relative to tuition revenue and other revenue. So the bottom bar is the provincial level of funding, the middle bar is tuition, and the top bar is other revenues. When we compare USask to other U15 universities and the University of Regina, we notice that government investment in USask is higher than comparators, tuition revenue is lower than comparators, and other revenue is about the median of our comparators. So I'll now turn it over to Airini to discuss our institutional commitments. Thanks, Airini.
Thank you, Greg. Thank you very much. We're actually in the final 3 slides for this part of the time together today. I'll be looking at past institutional commitments, and that's on the next slide. Devan's going to look at university reserves, and then we'll have a summary slide before we open it up for questions. And we're really looking forward to having conversation with the 260 or so who are with us right now. Really great that everyone's made time. Thank you, Devan, for recognizing, you know, the value of time and wanting to make it worthwhile for everyone. So we have had work underway about addressing some of the holes that our institution needs to fill in. You know, in my upbringing, it would be about preparing the soil so that we could perhaps plant pineapples in it, but I don't see that happening here right now. But it really is about preparing the way. And we have, over the past, we have dug some holes that have been about commitments and deficit, really. So we're working hard to pay these down, and we'll continue that work over the coming years with a commitment to our board to have all of the past institutional commitments addressed by the end of fiscal year 25-26. So that's April 2026. And this slide is showing where we've started in April, where we've, one view of where we were at in April 2021. So starting, you know, a multi-year view of this, where we are at as of April 2022. So you can see progress there. And when we look ahead to resource allocation and budget for the forthcoming year, how we see our trajectory. And this is one of paying down our institutional commitments. So there are commitments in there to do with research initiatives where there was an unanticipated funding strategy change. There's commitments in there where we move forward with buildings, and then there was a change in funding expectations, funding priorities for an outside funder with that regard, unexpected as well. So we needed to continue with these commitments, and then we need to pay them off, a bit like having a charge on our Visa card, or having a lease on a pay to own lease on a car. We're not able to actually do exciting other investments until we've paid off our existing commitments. So that's what we're all working towards. And we have made significant progress towards the elimination of our current unfunded commitments. Since 2021, we've allocated $21 million towards these commitments, and that resulted in the successful removal of 5 of those original commitments. We're definitely on the right path, and we're definitely ready for the work ahead. And part of that is that we have in process now that going forward, commitments don't proceed until there is confirmed funding, and that is clearly established. Our Board of Governors has expectations that we balance our annual budget and we replenish our reserves, which is included in the fund balance line that we saw before from Greg. And in this way, through addressing our balance between revenue and expense, and replenishing our reserves and addressing these, our institutional commitments, we are on our way to the needed financial sustainability of our institution. Let's hear something about our university reserves now, and Devan's going to help us with that. Over to you, Devan.
Thanks, Airini. Just like we would in, many of you in your own personal finances, after we get those liabilities paid down, we think about sort of how much, do we need to save to sort of bear the risks of the future and uncertainty. And so our board has, considering all the different risks and of an institution such as ours, has given us sort of a target of sort of 1.5% of our overall expenses as sort of a minimum amount of reserves they would like to see us accrue. And so in time, as we sort of get to have sort of our revenues exceeding our expenses, and we pay down our past debts, our goals would be to build these reserves so we are we increase our financial sustainability to weather sort of headwinds we may face in the future. And so currently we're sitting at a deficit balance of 12.3 million. To get to that 1.5, we would need to have sort of reserves of about 15.8. So in total, we're short about 28.1 to our goal where we want to get to. And so again, as Airini said, we are making progress. We know that as we get those institutional commitments and those paid off, those are going to allow us funds to do this. Importantly, the university sort of looks at this as sort of aggregated, and so any reserves we sort of build within our different units, that helps us towards this goal. And so again, we're making progress, but we do have a ways to go. But the trajectory is good.
Thanks very much, Devan. I'll take it back from here, and we'll look at our summary slide. You know, this progress that we're making is going to set us up for having an ability to have between $12 to $20 million available each year for strategic investment. So it's a future that we're working towards. People might be wondering, well, does that mean we're not doing any investment at this time? And that may be a question that you'd like us to explore, because there is good news in that regard as well. I can share about the number of tenure track and tenured appointments that have been approved to proceed during this time, because the academic work of our university continues, the research work, our community engagement as well, and we can describe other kinds of investment that continue to happen. We are being prudent, and we are making sure that as we make any decision, that our academic values lead our decision making and our budget realities inform our decision making. We have planned for strategic investments all the way through that align with our University Plan 2025. Thank you everyone who is part of the development of that plan, which has ended up being such a remarkable roadmap as we've moved through times from 2018 through our current times, and now we look ahead to fulfilling these 5 aspirations that we're asked to track our progress against in our plan. We do have our provincial government operating grant that's available until 2025. And with that, this unique bundling that our province chose to adopt, and that is to have stable funding alongside one-time strategic funding to support our work towards long-term financial sustainability. With that comes an MOU that describes expectations between government and the university, expectations around the funding being used to help us recover from COVID and its impact on our sustainability, expectations around entrepreneurial work and the expansion of opportunities within our reach as a university, and the sustainability piece as well. So all in all, we do have a multi-year strategy that was approved by our board, some 52 or so strands to that strategy approved around 2020. And we're making progress towards these. And what we're sharing today is signposts, signals of work underway and progress being made with that effort. So we're addressing the deficit that we have seen in colleges, schools, and support centres, and we're seeing more movement into the healthy financial position amongst our responsibility centres. We are addressing those commitments that we looked at and debt, and we are addressing service needs and investments. To do that, we are tackling the need to restore our reserves so that we've got funds available for opportunities and also for those unexpected risk times that we need to manage. And we're working to grow and diversify revenue. Tuition revenue and enrolment planning are of key importance there. Overall, we have no better time than the present to be able to position ourselves as strongly as possible. And we know that we're going to move through this stage and we're going to have the opportunity for growth and success as we get stronger. The big messages then are, across the university, we're making real progress towards sustainability, the kind of sustainability that will help us to be the kind of university that the world needs. We're together in this effort, and we're going to get better and stronger as we move forward together. So with that, and my thanks to colleagues Greg and Devan, we're going to hand over now to Paddy, who's going to help us with the question and answer time. Thank you, Paddy.
Thank you, Airini. Thank you, Devan and Greg and Airini, for presenting so carefully and thoroughly presenting the presentation portion of the budget town hall. Colleagues, there are information resources available for you, including we will make available links to USask finances. So this includes budget information, the planning and town hall. The information will be, it will require your USask login, but you will be able to see the presentation again, as well as any of the Q&A segments. We also have financial reports available, and we have modules around resource allocation. So those will be available to you. And I would, my goal is to stop sharing the slides so that we can go back to this version. Thank you. And with that, I'm just going to pop open the chat. And so there have been some, the resources that I just mentioned now appear in our chat with links for you. I'm just going to go back to see here, because I think we have a first question. So thank you so much. And by the way, we do have lots of time for questions, which is excellent. If for some reason we're not able to get to your question, we are still going to record the question, and we are still going to record, and we are still going to provide an answer to that question. So those materials will be available as part of the package when the recording from the budget town hall comes out and around. So thank you, Sharon. I'm going to read this for you, if that's okay. Glad to have you here. Your question relates to Airini's summary, and is to ask, how are we balancing our desire and need to be and to focus on innovation and to execute our strategic priorities parallel to the debt we are paying off? So how are we balancing the innovation with the need to pay down that debt, those unfunded commitments? And what are some of the approaches or criteria to the priorities on staying ahead of the curve while honoring our other commitments? Fantastic, Sharon. Thank you for leading us off.
Yeah, it's a great question. And Sharon, a belated welcome.
Thank you.
To the University of Saskatchewan. Sharon, before I have a go at this, because sometimes I can get a bit excited and start giving a lengthy response. Help me to focus in here. Is there anything else you want to add in that would help us understand the question?
I don't think so. I think the question centers around how do we choose when we only have, a specific bucket of money? To use an analogy, you know, of purchasing a new house and wanting to make renovations, but you know that you have all these other commitments to paying your mortgage and household debt. And how do you prioritize? How does the university prioritize how much money we're going to allocate to initiatives that will move us forward and keep us, you know, current or ahead of the industry in terms of other universities as well?
Great, and thank you so much for raising this. At the highest level, what we do is we go to our mission, vision, and values as a university. And we want to be that world-class university that's in service to our communities and that is respectful in working with and for Indigenous communities and peoples. And then we get to our expression of that, which is through our university plan. And we're asked there to track our progress towards the 5 aspirations in the plan: transformative decolonization, productive collaboration, meaningful impact, distinguished learners, and global recognition. That helps to frame decision-making priorities. Alongside that, and also being an expression of all of this, is that we have an MOU with the government for the 4 years of stable funding that we have, plus the strategic investment. And we have 26 projects that are funded through that strategic investment. Online, we have here today Dr. Vince Bruni-Bossio, who is our Associate Provost Strategic Priorities. And he's available if we want to. There he is. Hi, Vince. If we want to learn more about those projects and how they're helping to strengthen our university, both on the entrepreneurial side, the innovation side that you're speaking of, and then the stuff that needs to be done to make us strong as a university in terms of financial sustainability. So that MOU is part of priority setting as well. And then the next part that is taken into account is where we have undertaken to meet some performance indicators with government. So these are not not linked to funding, but they are saying how we differentiate ourselves from other post-secondary providers. An example in there is our commitment around experiential learning, our commitment to rank within the top 1% in the world, our commitment to Indigenous peoples and advancement, which takes expression through our Opahotan, our gifted Indigenous strategy. Overall, though, I do think you're onto something, Sharon, in asking the question, how do we know out of all of these possibilities that we're actually making the decision using the right criteria at that time? So one of the pieces of work we've got underway at the moment is to pick up on a phrase in our university plan where we say we're going to have bold ambition. I'm beginning discussions with university community members. What does bold ambition look like when we put it alongside our 5 aspirations that we're to track our progress against? So in global recognition, it says we're going to set the standard in learning. What would be a bold ambition to aim there, to have there? Distinguished learners, what would that look like? And we need to figure that out pretty quickly so that we're ready to be able to move forward with planning and decisions. Overall, though, our academic values, as taking expression through mission, vision, university plan, they guide our they lead our decisions, and then our budget realities then form those decisions. More to come on this, though, and looking forward to talking to more colleagues about that.
Thank you, Sharon. Thank you for starting us off with such a robust question that will be helpful to everyone in attendance. Colleagues, just to let you know, it is entirely acceptable to send me your questions through the direct messaging channel. And when I get it in that format, I'm going to assume that you're wanting me to ask it on your behalf. And so I won't give attribution or authorship if it comes in that way. But an excellent question here. And I think, Greg, you'd be well suited to take a crack at this one. And the question is really, where does the 1.5% value come from that the board has determined to be in USask's reserves? Are there examples of what other institutions use as their rate for populating those reserves? So 1.5 to 6 is our policy as determined by the board, where 1.5 to 6% of our expenses. You'll correct me if I've misstated that. Where does that come from? And is it comparable to what you would see in other Canadian universities?
Yeah, thanks a lot, Patty. So excellent question. So one thing to think about, this policy was set, I believe, about 6 or 7 years ago at the request of the board to determine what level of reserves we should have. And what was then done was a broad assessment of the universities, the U15 and other Canadian universities, to really understand where the reserves should be, and also consultation with the provincial auditor as well. And what was determined there was this 1.5% to 6% of overall expenditures. And basically in terms that, the other part too that we paid attention to was our history. So the other parts of our history that we looked at were various different revenue issues we've had, but also some of the capital problems we've had over the years, which include 2 structural failures of buildings. So we looked at the cost of those as well. And we looked back too to include things like the Great Depression, 2 world wars, and even during the one world war was a pandemic. This was before this pandemic, so but we were prepared. So we ended up with this 1.5% to 6%. And it's basically at this point about 15 million to 60 million of our overall expenditures. Just to be clear, kind of with everyone here, that's about, our payroll's about 50 million a month. So it doesn't really position us to have anything go significantly wrong in terms of, a significant business interruption or anything, but it does position us to, as we looked at the past, to really look at what we've needed it for, to look at other universities and see what they have, and then understand, we're not here just to be a bank. We wanted to make sure that we're spending all of our resources on our mission, but this was just to protect the university in case of a kind of a significant crisis like a structural failure of a building or other things that could happen. So thanks, Patty.
Yeah, it's such a good question. Very grateful to the asker. I have another direct message question that's it's right on the money. How does the current inflation rate / potential recession, how does that impact our current financial projections?
Yes, I see Devan's unmuted there. Are you?
Yeah, I can take that one.
Thank you, Devan.
It's an excellent question. Thanks, Patty. And it really relates to that sort of that last indicator we have on sort of those guideposts. Is like what looking forward. We know that inflation will come through. We know that it comes through sort of a number of different areas, as far as more obvious and sort of timely in terms of heating costs and such this year. But also it will come through sort of our salaries and wages as time goes on, and so it's something we need to prepare for, and it's something that in our forecasts, as we forecast out, we have been making modeling and out to what we think it is, and so it is modeled into our future forecasts, and so in that way we feel somewhat prepared for it. I think that is the one point we see we're making this progress towards closing this sort of operational deficit, but we know that on the revenue side, we're pretty fixed. With this MOU with the government, we do not get inflationary increases. So it's sitting solid, it's sitting flat. We do not have any revenue increase on that until the next chance we get to negotiate an MOU. And as part of that MOU, we also have fixed amounts that we can raise tuition, which of course we want to always do very thoughtfully and not lean hard on that. So that sort of fixes that top side. So it is a challenge. We are thought of it. One thing that I think is really important for our community to know is that as we've seen interest rates go up, our organization actually entered into interest rate swaps that fixed our interest rate quite a while ago. And so long before we saw this large increase in interest rates, all of our sort of external debts had that fixed. So, I really think that foresight is really paying huge deficits now, as if, the 257 of us in the room, I suspect there's a large portion who may have mortgages with variable rates and are we're seeing the impact of that. And you take that to a much larger amount for an institution for the size of cost of our buildings, that's a huge risk. And so that was an excellent risk that was covered. As far as recession, everything we look at is that Saskatchewan, we're looking better than most of the country as far as a recession. So things we're monitoring and we've sort of modeled, but of course, always things to you never know until they get here. So we're doing our best to with the information that we have.
Thank you, Devan. Great question. Full answer to the best of our knowledge, and also grabbing from the disciplinary knowledge. So really appreciate that. I have another question in the direct message chat to me, and it has to do with research projects. So regarding research projects which are in deficit as far as funding is concerned. And I apologize. So I'm gonna infer. So the person asking the question understands that this may not be exactly the right place. It may require the OVPR, but we'll put it out. We'll put it out on the table. What do we do? What can we do in cases where there are overextended or commitments are made in research projects where the funding is not available? How are we approaching that? Maybe this will be an Airini question. How are we approaching that from a resource allocation perspective? Thank you, Airini, for jumping in.
Thank you, and thank you for the question, because this will be something on the mind for so many of our colleagues here, with ourselves being a research-intensive university committed to student experience. I hope you don't mind if I say it depends. So it depends. If the research project is one like I was speaking of in that slide that was about our institutional commitments, we have taken on as an institution a number of research projects or centres as such that we ended up being overextended on because there were unexpected changes to the funding arrangements. So where that occurs, it's the institution that will figure out how to pay off that overextension, to pay off those unfunded commitments that we have. And that may be the situation that you're looking at. We started off 2 years ago with $24 million in unfunded commitments to institutional research projects. And we have paid off around $5 million of that portion. So we're sitting around 17.5, 18 million in the unfunded commitments for institutional research there. And in the resource allocation process heading towards budgets the comprehensive budget going to the board in March, we have set aside several million to pay down some more of that, because our goal is to actually have them all paid off by the end of fiscal year 25-26, so April 2026, and we're making good progress on that. We have other ways too that we bring funds in, such as through our investment income to help towards those costs. Now, if you're talking about a project that is within your department, within an interdisciplinary group, and there's been an overrun in costs there, then the depends bit is about your funder. Is it your department? Is it your college? Is it one of our tri-council agencies? And if it's any one of those, there will be procedures for monitoring and then addressing the overruns. As an operating principle, any funded group is actually responsible for their revenues and for their deficits. And so the solutions will need to be found by the group. Now, the good news is that we have support services available to researchers to help with the forward planning, and then also for tackling those problems that come up. And the OVPR, the Office of the Vice President Research, is there to help with that. And we also have in our colleges and schools our SBA finance members there as well. And I think as a community of academics, we want to see our research succeed. So it's also possible to reach out to mentors who can help with advice for that connection to needed support services to see through that question of how am I going to get this project back in the black, because this research matters and we want to finish in a good way and then disseminate it to make a difference as a university. I hope that helps.
I think it's, yeah, Airini, I think you hit it perfectly on the depends. I think you covered off in such a way that I think it fits with the way the question was asked. So appreciate that. Thank you for thinking of it in that variable format. Volker has a question. Welcome, Volker. Great to have you here. Volker has a question in the chat, thanking you for the presentation. Somewhat similar. There was a comment on one of Airini's slides that commitments will no longer be honored unless there is a strategic plan in place. Can you elaborate on that?
Yes,
Airini?
absolutely. And Volker, let me have a go at this, but please feel free to jump in as well. So the statement was, going forward, commitments will not proceed until confirmed funding strategies are established. So what that means is that we've got exciting new projects coming on board, and we want to support them by having really thorough financial planning there, so that all of the research going in, researchers and support teams going into the research project, the research centre, whatever the arrangement may be, that they feel confident that the finances are sorted so that they can get on with the research part itself. So we work together with those teams to make sure that there's confidence in the financial arrangements. Did you want to follow up on that, Volker?
No, I think you addressed it. So from what I'm understanding, what you're saying is really before any commitments, new commitments are being honored, what you would like is to work with the unit together and establishing a plan of how the financing can happen, how the support can happen. I mean, I'm particularly interested, as you know, about commitments that we made in applications that had been submitted and are now awarded. So, you know, where those commitments were made in the past. And so I'm wondering what our plan is to honor those commitments.
Thank you. So I think you framed that.
So those are not new projects, right?
Yep. And so we have work underway, particularly around the Vido Centre, and where there is work being coordinated through our Chief Financial Officer to help address that question of what about existing commitments? What will be the arrangements there? I don't know, it's early days, Devan. Did you want to speak at all about that particular part?
No, I think you nailed it there, Airini, and Volker, offline, maybe you and I can have more discussions sort of thing if you have anything specifics that we want to
Yeah, so that would be good to have a follow-up on that if that's possible. Thank you.
You betcha.
Thanks
so much for your question and involvement.
Yeah. Good clarification, Volker. Appreciate that. Existing commitments, future commitments. I'm not at the very moment seeing any questions in the chat, but that's okay because I've got a couple of questions of my own that I thought we could use just while people are thinking about whether they have additional questions, because we still have lots of time together. So Airini, I think oh, you know what? I'm going to stop myself because I see a hand went up. Joelle, did you want to go ahead and ask and pop on and ask your question?
Sure. It's a little bit less than trying to get an answer from Airini or Greg Fowler. It's really about the background information that is used to support this town hall. We've got the resources for the annual financial report, and that's really useful. And I actually find that the financial report is more useful than the data being presented in these slides, because in the slides is a summary of a lot of that data. But I guess my question is do we have access to even more of that data to sort of like do a little bit fine-grained analysis of some of the issues that come up there? Because I wasn't really able to find some of this stuff beyond what was in that financial report. So are there other resources that faculty have available that if they are interested in a particular issue, they can drive into that a little bit more?
Great question. Thank you very much, Joel, for that and for your time, and interest in looking at the materials. That, at a high level, we want to make available as much as possible to the university community so that we have shared understanding, and the hunch is that we as this university, we should be able to figure things out together. So just wonderful to have the curiosity and the interest in having more information. What we've done in the past, Joel, is that when we've received questions where folks have been diving into the material and they'd like to go even further, we've had like a one-on-one with them, or we've actually met with small groups as well. If there's a particular, like we've had times when we've met with clusters of departments because they've got particular finance questions that they weren't finding the answers in. I don't know if you've got a particular areas you want to raise today, which we might be able to have a crack at, but definitely if it would be helpful to follow up individually, we'd be happy to do that.
Okay, so just to follow up, I'm head of Department of Economics. So I'm also chair of the Committee of Department Heads in the College of Arts and Science. And so we have had these discussions in the past that related a little bit more to the TABS model. And part of that was delving into these financial reports. So if there's something that faculty need in more detail, they would just make a request to your office, to Greg's office?
Yep, right to both of us. And now you can also involve our Chief Financial Officer, Devan Mescall, as well. And let's take it from there. That was a really useful discussion that we had with the department heads. Yeah.
So when is your next town hall? So maybe I want to do some homework, right? So
we do spring and fall. Yeah. And the spring one is particularly focused on what's the budget that's been approved and how does that set us up for this year, this coming fiscal and out years as well.
And at that point, we'll know well, I guess we already do know what the provincial transfers are going to be because that's already a commitment made, right?
Yes, that's right. We do have development work underway right now, Joel, around what will MOU 2 look like. We've got MOU 1 in play right now. Yeah. Very interested to have views from across the university.
Yeah, thank you. And thank you for running these town halls. It's useful.
Good. And you're quite right. March, we usually anticipate the announcement of the provincial budget in March, which includes that information that is relevant and salient for us going forward. I have another question messaged to me, and it goes as follows. As part of the budget projections, are future and fair negotiations with different unions considered? And maybe I'll just tweak that a little and say are and how. So as part of the budget projections, how is it that future and fair negotiations with different unions get factored into those projections?
Thank you for the question. I'll start things off, but it's likely going to be a partner one with Greg, and we have members of the HR team here today. We build in that part which Devan was speaking of inflation, and in the scenarios that we think through of inflation, it's, you know, what would it mean for an adjustment to be made to wages and salaries, and I think Devan actually mentioned that as well. So yes, we do take into account a range of scenarios for what was the phrasing? Fair and
future and fair. Future and fair.
Yeah, really nice phrasing there too. Future and fair negotiations across our 9 collective agreements that we have. Greg, did you have anything you wanted to add in there?
Yeah, thanks a lot, Airini. So yeah, obviously we have these, you know, many collective agreements that we work through, and also some planned increases that we do for exempt and our senior leaders as well. And the one thing that we've really used as a foundation over the years is the salary market that we're looking at, and I think it's just important to consider that. I think it's to me, it's been our foundation of how to provide both fair and equitable wages across the university and for the various positions that we have. So really thinking about the market as we move forward and trying to understand where that's at and forecasting for that. So thanks, Airini.
Thanks. And let's just swing through to Devan and see if there's anything else there.
I agree. I like the fair and future phrasing there, and you know, you guys both nailed it, that we do consider a number of scenarios. We know that things aren't you know, stay the same forever, sort of thing, and so that's not the scenarios we operate under, sort of thing. But and we also know the value. You know, we believe our human capital, you know, our team here, our community, really, that's what creates our value. Everyone on this call, so that fair is important to us.
Thank you for answering that. And thank you, colleagues, by the way, for you figuring out you can put up your hand if you want to voice the question yourself. Happy to see you do that, as well as chatting to everyone or chatting directly to me, whatever works for you. With that, we have another question. Understanding that there are financial implications for all the things that we do, but understanding that there are financial implications resulting in the closure of the University Club and some other spaces on campus. The closures impact community spaces, places, visitors. Can you share any insights on that, the closure, the implications regarding potentially future reopening or the financial status? And I think, given the question, we'll frame it around the University Club. If we could put that out there.
I'll start it off. You know, these are really tough decisions, and I've been here 21 wonderful months at the University of Saskatchewan, and I've never had the opportunity to attend the University Club. It was affected by COVID as such. I hear great stories about how important it is to have a place like that is a gathering place, a hosting place, a place for happenstance discussions that lead to remarkable further projects, collegiality, and so on. So there is clearly a desire and a need to have those spaces at our university. The University Club itself is a distinct body and has its own governance arrangements. And so between the University Club and the university, there are ongoing discussions about what can be future arrangements that would support that kind of desired way of being as an engaged university community. So they have been long discussions, and it's because we've had to look at this option, then rule that out, look at another, rule that out. The discussions are continuing, which is a good sign that they're not completed as such. But before I go much further on that, maybe I should swing over to Greg, because he's been there for all of those discussions. Thank you.
Well, thanks, Airini. Well put. The University Club was run by a separate board and organization. So that's just important to note. University resources weren't put towards that. And the other part is too, just looking across at our comparators, the other U15 and the 96 universities in Canada, I think there's only 2 of these left that are open. So it's just something to consider, that as we are challenged to consider how to keep this operational, that there's very few in Canada, and the 2 that are open have quite a different model. So it's just something as a community, we need to consider if they are viable in the future.
Thank you, Greg. Thank you, Airini. I'll move again to posing a question that I had, just in case while people are thinking about whether they want to pop in some additional questions. And Airini, you're going to smile because you may bounce this right back to me, and I'll be here. I'll be here to catch it if you wish. But the question is, are we expecting students to pay more to cover the costs of past commitments that the university has made, or to fix our reserve problems, challenges? Is that what our expectation is?
Can you hear me all right?
Yes, we can. You're on.
Thank you. It just went a wee bit strange for me there for a moment. So tuition is a very important part of our way of operating as a university. In 21-22, tuition made up about 20% of our operating overall, and we set tuition based on clear principles that are part of our tuition policy, that is a board policy. Included in there is predictability, affordability, and our ability to actually work together with students and leaders across the university in setting the tuition. Our key focus with tuition generated revenue is student experience. And so the work that our tuition advisory group has done, and we've consulted directly with student bodies, is to identify what are those areas of investment that students would say these are priority areas, and interestingly, areas for disinvestment. And Paddy, you've been doing a terrific job with the latest survey. And how many we had? Was it 3,000 respondents?
Yeah, 3,300 of our students. Yeah,
responded to the survey. We've got the collated results just in last night from that. And Paddy, I'd invite you to share some information from there. At a high level, though, the intention is that we will make explicit how it is that tuition investments by students result in an uplifting of student experience at our university. We want you to be sure, as Devan likes to use the word value, we want to be sure that there is excellent value from the most extraordinary team of researchers, educators, service units in any university in our country. But Patty, what was coming through in the feedback?
So I was extremely excited to see our students highlighting to them. So based on, say, proportion of students, undergrad and grad, who are signaling things that are very important to them, in that, say, top 10 category, where you might see 2/3 or more of our student population that responded saying, yes, this really matters to me. I'm excited to see that some of the things in that list are in fact the things that are actively viewed as priorities. So scholarships and bursaries is in there, mental health supports, general wellness supports, greater support for internships. One that I think is just incredibly fruitful is open access materials in classrooms. And those are just some examples. That report, as Airini said, will be put forward and posted for everyone. And we are actively using it now. The results will be actively used in the tuition consultations that we invite all of our students to attend inside of their colleges in December and January. But the thing that strikes me is that what we need to be doing is a better job of sharing with our students and our community as a whole as to what are the investments that we make into those things. Open access textbooks is a great example. And here you've got government giving us an annual allocation put together with university resources, put together with our faculty colleagues who are prepared to put energy and time into adopting an open access textbook, put together with our graduate students who we can hire to support the adaptation of books. And in the main, what ends up happening is our students save money. So millions, we have room to grow in that area. So I'll just use that as an example, Airini, of how it is that our students signaling the things that are important to them, put together with our resource allocation and budget process and the prioritization that we've talked about earlier on in this Q&A, can come together in a synergistic way. To add, you heard Devan reference this as well. In the MOU that we have with the provincial government, we have made an agreement around tuition rate setting in there, and we are honoring that agreement as we go forward. So we've got principles, we've got an agreement, we've got student voice, and so we're getting better. We've got predictability, putting out that multi-year model so that our students can anticipate what they're, to the best of that we are able, with some qualifications, can anticipate what the costs will be over a period of time.
Patty, really great to hear from the survey. It's hot off the press, really. And we've got a question in the chat box here, which is about low-income earners. But I wonder if I could swing it back to the student experience and sort of borrow off that question to connect it with tuition, because we are going to be thoughtful about where we position tuition levels and fees as well. And we know from Uniforum data that in some cases we are actually positioning ourselves at the far lower end of tuition levels, and we could look thoughtfully at how we might want to move ourselves up to align with our comparators. Now, that said, if there were to be a lift in tuition, that may affect some particularly low-income students in our community, and that'll matter. That will have an impact. Can you help us to understand what we've done in the past when we think about those students?
Yeah, one of the quick examples that I would use, Airini, is that I'll think about our international students. So there is, without question, there is an international tuition to attend a Canadian university, and the University of Saskatchewan is no exception. when we, in this last year, increased that international tuition, what we did, which we know will have an impact, what we did was we took a portion of that incremental tuition. We took 10% of that incremental tuition for international undergraduate students and master's students, keeping in mind that as of last year, our PhD international students don't pay any form of a differential. So for those two bodies of students, we took that 10% and we put it into crisis aid, which is immediately accessible to international students, undergraduate and master students, bursaries for undergraduate international students, and bursaries for international master students. So the logic behind that fits with inside of Pete's question, although we'll come back to Pete's question, but it fits within that notion that we are thinking about those who are most impacted by the kinds of changes that we bring to bear. So that's one example, Airini. The other one is to say, of course, that part of our comprehensive campaign, driven by our Vice President of University Relations, will be to go move towards increasing our scholarship and bursaries, so increasing the financial aid, the financial dollars that are available to our students, lining up entirely with the fact that that's the most important thing according to the tuition survey. Shall we go back to Pete Grant's question from the employment side? So thank you, Pete, for this. The continued premise about the fact that inflation hits low-income earners the hardest, and is the university committed in some way to helping those employees working on campus with the lowest incomes, to helping that group? And of course, Peter is saying here that he would argue that that would be fair in these difficult and hopefully unusual times.
Mm-hmm. It's a really timely question because it's got that word inflation in it. I'm going to head over to Devan in a moment. But if I could just say, Peter, that your question is very timely because one of our president's priorities is equity, diversity, and inclusion. And so we're reaching a really good point now in completing our EDI plan and actions. So having this question come up is very timely in itself because we do have a commitment to equity, diversity, and inclusion at this university. Let's swing over to Devan though and see the connect there with the inflation piece.
Yeah, Peter, I love the question. It's extremely thoughtful. We know that these things don't impact everybody the same. And so, again, connecting that to taking it to sort of the academic values and the values of the institution in all of our resource decisions is really important. And so, as Airini said, on seeing how it differentially impacts different people, different groups is things we try to think about and build in to inflation specifically. A lot of that is upcoming. A lot of that, the impacts of that, we haven't done anything to this point on sort of those will come through sort of different agreements. So I really appreciate you raising that point because it's extremely thoughtful and something we should always raise our eyes to. So great point, Peter. And this is as we think about value of investing time, a point like that is something that I'm really glad that we took the time to do this and take those points away because they're things we need to keep in our mind when we think through decisions. So thank you very much for that.
Thank you.
We are so we're at 2:24. I'm not seeing any additional questions. I know I could ask other questions, but I'm fearful that if I did that, it would take us over our 2:30 time slot, and people wouldn't appreciate that from me, and I get it. So I think what I'd like to do, Airini, is pass back to you, if I might, and have you do our wrap up. And thank you for letting me moderate, and I hope I did justice to the great questions that our colleagues put in the chat. Thanks, everyone.
Thank you, Patty. And I agree. Thank you so much for the questions. It makes such a difference to be able to hear what's being heard and what's top of mind. The invitation is there, everyone, to make contact if you're interested in that follow-up. And we heard about one department that's going to be in touch, and that's all good, really good. I'll just say my thank yous, and then I'll hand over to Devan, and the final word we'll leave with our Vice President, Finance and Resources. But I would like to just say an appreciation for all of the support team that's here that made it possible to have the presentation and to try and be responsive to questions while also proactive to thinking about what is of interest to the university community. Your input, feedback on how it's gone will be important. There'll be an FAQ site and also a space available for providing suggestions. We're totally open to that. The Planning and Priorities Committee of Council has been so helpful for that work. Chair Daryl Mousseau formerly, and Chair Vicky Squires now, for helping us understand how to run the town halls. So my sincere thanks, and to my colleagues, Devan and Greg, thank you for this opportunity to work with you today. Devan, over to you.
Great. Thanks so much, Airini, and thanks, Patty, for the great job on the questions, and Greg for providing so much great information. I really appreciate all of you coming out again and investing this time. I was sort of practicing last night as a sort of my first round. My son said, "Dad, nobody's gonna, like, with the football game and the soccer game, no one's gonna show up." So I'm glad I can go home and tell my 15-year-old that the people were exciting about accounting and information. So it'll be great. And the other comment he had, which I sort of agree with as I look up at this camera, is he's like, "That picture they have of you, it's like you had way more hair." So I don't think it's this position, but check in with me in our spring one, and hopefully we're not going too far back. Hopefully the deficit gets smaller and maybe the hairline will come back too. So thank you so much, all of you, for your time, and any feedback afterwards, or please reach out in the email. So great. Thanks to our team.
Yeah, thanks, Devan and Airini, and for the team for putting this together. Just some last words. We're really trying to enhance the information we provide to our community, and we want everyone to have an understanding of our situation and kind of the plans going forward. So, so we will be sending the links for the financial strategy, the financial information as well that we have, our digital strategy on providing financial information, and we'll continue these town halls to be transparent to our community and answer any questions. And and thank you everyone for attending. It's really appreciative, and it's really on this day as well. It's just very special to have everyone in our community hear this and understand and ask the question. So thank you.